Welcome to the Marketing and Risk Management Seminar for the 2012 Soybean Management Field Days. I'm Jeff Peterson, President of Heartland Farm Partners. Heartland Farm Partners is a grain and livestock marketing company based out of Lincoln, Nebraska. At our field stop today, we have two main objectives that we want to achieve. With the grain markets being as volatile as they are with all the dry conditions, we really want to focus on understanding the global soybean market and also focusing on marketing soybeans in this new era of prices that we have. To get started with, to best understand our global situation, we'll first start off in Nebraska. As we take a look at the Nebraska soybean planted acres for this year, we're at 5.1 million acres. That's up 200 million acres over 2011 and is the second highest going back to 2010 when we were at 5.15 million acres. Next, we'll take a look at the Nebraska soybean production numbers. As we look at those numbers a little closer, we can see that the last information we have on our slide is actually for the 2011 crop year. With all the uncertainty we have out there right now, we have not put up a 2012 number. As we look back to 2011, we can see that the production for Nebraska was 258 million bushels, and back in 2010 it was 268. Taking a look at the conditions in Nebraska so far, our indications are that we're going to come in below both the 2010 and 2011 numbers. Now, to get our arms wrapped around really the current situation that's going on in soybeans, it's best to take a look at the U.S. soybean balance sheet. Now, we have a lot of numbers on this table, so we'll walk you through it. On the left-hand side, we have all the different categories, such as the planted acreage, the yield, and then all the different uses of soybeans. And then across the columns, we can see that the first two columns actually are for the 2010 crop year, and then the second column is the 2011 crop year. As we move into the 2012 crop year, that would be the last estimate that USDA put out in the July report. That number will be updated here in a few days on August 10th. As we move forward, we'll also see that there are two additional columns. One says Heartland 1213 and then Heartland 1213. What we have in those columns, we're going to discuss how we think this year is going to play out. We first of all want to take a closer look at the planted acreage number. In 2012, USDA was using 76.1 million acres. We believe that because of the hot, dry conditions, that there were about 500,000 acres less of double crop beans planted. And as a result, we're using a 75.6 million acre number so far. The other change that we're seeing is in harvested acres. We're coming in at 73.7 million acres. That compares to USDA's 75.3. That's 1.6 million acres less. How we're coming up with that is that we have 500,000 less double crop acres planted. But in addition, as we look back in time, the best year we can find is 1988 when we had the dry conditions just like this year. And in that particular year, we had much higher abandonment than what USDA is using. So as we factor in the abandonment of 97.5%, that's what brings us to our 73.7 million acres for harvested. Our next item we want to look at is the yield. Currently, we're using a 37 bushel per acre yield. That's 3.5 bushels the acre below USDA's number. We believe that's supported because of the hot, dry conditions that we've had, and actually because of the poor and very poor conditions are actually higher this year than they would have been in the 1988 year. In addition, we also are using a lower beginning stock number. We believe in this next August report that USDA is going to raise the export number by 30 million bushels. And in addition, they will be lowering the ending stock number by 30 million also, so they'll be taking the 2011-12 down to 140 million bushels, and so that's why we're using 140 million bushels in our numbers. As we bring all those numbers together, and we'll stay with USDA's current demand numbers, that shows that we're going to come in at a negative 237 million bushels. And what that figures out to be, as we talk about the days of supply, is that we would run out of soybeans on the 2012 crop year somewhere about July 15th of next year if there isn't some changes made to the balance sheet. That's the next thing that I want to talk to you about. Our last column that we have will focus on how can we take the amount of supply that we have and ration it so that we can end up not running out of soybeans. So as we take a look at the first major use of soybeans, crush, our forecast would show that we would need to reduce the crush from 1.61 billion bushels down to 1.5 billion bushels. And in addition, on the export side, we'd have to take the exports from 1.37 billion down to 1.113 billion. And guys and gals, this is going to be a very big task. The reason it's going to be such a big task is that the demand for soybeans coming out of especially China has been very, very strong. And in addition, in order to be able to see the crush number reduced that much, we are going to need to have our demand pull back from poultry and also from the swine industry. Our ending stock number that we have ends up at 130 million bushels, and that's not even that abundant a supply. That still means we've only got, as we get to the end of the year, and the end of the year would be August 31st of 2013, we'd only have 17 days supply left, and that's very tight. So now we'll go ahead and move on and take a look at the world situation. Now, to get our arms wrapped around really the current situation that's going on in soybeans, it's best to take a look at the U.S. soybean balance sheet. Now, we have a lot of numbers on this table, so we'll walk you through it. On the left-hand side, we have all the different categories, such as the planted acreage, the yield, and then all the different uses of soybeans. And then across the columns, we can see that the first two columns actually are for the 2010 crop year, and then the second column is the 2011 crop year. As we move into the 2012 crop year, that would be the last estimate that USDA put out in the July report. That number will be updated here in a few days on August 10th. As we move forward, we'll also see that there are two additional columns. One says Heartland 1213 and then Heartland 1213. What we have in those columns, we're going to discuss how we think this year is going to play out. We first of all want to take a closer look at the planted acreage number. In 2012, USDA was using 76.1 million acres. We believe that because of the hot, dry conditions, that there were about 500,000 acres less of double crop beans planted. And as a result, we're using a 75.6 million acre number so far. The other change that we're seeing is in harvested acres. We're coming in at 73.7 million acres. That compares to USDA's 75.3. That's 1.6 million acres less. How we're coming up with that is that we have 500,000 less double crop acres planted. But in addition, as we look back in time, the best year we can find is 1988 when we had the dry conditions just like this year. And in that particular year, we had much higher abandonment than what USDA is using. So as we factor in the abandonment of 97.5%, that's what brings us to our 73.7 million acres for harvested. Our next item we want to look at is the yield. Currently, we're using a 37 bushel per acre yield. That's 3.5 bushels the acre below USDA's number. We believe that's supported because of the hot, dry conditions that we've had, and actually because of the poor and very poor conditions are actually higher this year than they would have been in the 1988 year. In addition, we also are using a lower beginning stock number. We believe in this next August report that USDA is going to raise the export number by 30 million bushels, and in addition, they will be lowering the ending stock number by 30 million also, so they'll be taking the 2011-12 down to 140 million bushels, and so that's why we're using 140 million bushels in our numbers. As we bring all those numbers together, and we'll stay with USDA's current demand numbers, that shows that we're going to come in at a negative 237 million bushels. And what that figures out to be, as we talk about the days of supply, is that we would run out of soybeans on the 2012 crop year somewhere about July 15th of next year if there isn't some changes made to the balance sheet. That's the next thing that I want to talk to you about. Our last column that we have will focus on how can we take the amount of supply that we have and ration it so that we can end up not running out of soybeans. So as we take a look at the first major use of soybeans, crush, our forecast would show that we would need to reduce the crush from 1.61 billion bushels down to 1.5 billion bushels. And in addition, on the export side, we'd have to take the exports from 1.37 billion down to 1.113 billion. And guys and gals, this is going to be a very big task. The reason it's going to be such a big task is that the demand for soybeans coming out of especially China has been very, very strong. And in addition, in order to be able to see the crush number reduced that much, we are going to need to have our demand pull back from poultry and also from the swine industry. Our ending stock number that we have ends up at 130 million bushels, and that's not even that abundant a supply. That still means we've only got, as we get to the end of the year, and the end of the year would be August 31st of 2013, we'd only have 17 days supply left, and that's very tight. So now we'll go ahead and move on and take a look at the world situation. As we dig in and understand what's going on out there in the world, the slide that I've put up for you is the 2012 world soybean production. As you can see, the U.S. is currently on record to produce 31% of the world's soybeans. Next, Argentina comes in at 21%, and Brazil is currently forecast to be at 29%. I do believe the U.S. proportion will drop, but we'll have to wait for future reports out of USDA to make that adjustment. At this time, I want to dig a little deeper and help us better understand the major soybean producers of the United States, Brazil, and Argentina. As we take a look at the United States, we're forecasted to produce 3.03 billion. And as we talked about a little bit ago, we do believe that current estimate, though, is down to about 2.7 billion. Brazil is currently on pace to produce 2.9 billion, and Argentina is on course to produce 2 billion bushels. Now, what's so significant about this year, though, is that if the U.S. number does come in somewhere around 2.7 billion, this will be the first time in history that Brazil produces more soybeans than we do in the United States. As we talk about the soybean demand, we don't feed soybeans directly, so I think the best thing for us to do to really understand this situation that's going on out there is to break it down into the products that come from soybeans, which is soybean meal and soybean oil. We'll first start with soybean meal. Currently, the usage for soybean meal is 27% of all the world's soybean meal goes to China, 17% goes to the EU 27, 15% goes to the U.S., and those are the three that we really want to focus on. As we dig into the soybean meal demand, one thing that stands out to us is China. China continues to grow at an ever-expanding rate, while the U.S. and the EU really stays very similar to what they've been for the last 20 years. We do see a little bit of growth coming out of Brazil and also out of Southeast Asia, but they're nothing compared to what we see in China. Now let's take a closer look at the Chinese situation. As we look at the Chinese soybean meal demand, what we've laid out for you is what their demand has done from 1995 through 2012. And I believe the best way for us to really show what the growth has been is to break that into two different time frames. So we've laid some lines in for you that go from 1995 through 2007, and then from 2007 through 2012. And what we can see is that from 1995 through 2007, their growth rate is 13% annually. And as we take a look at the last years from 2007 through 2012, their average annual growth rate is 10%. Now, to put that in perspective, if we take a look at the rule of 72, in 7.2 years, China's demand for soybean meal will double. And they're already using 27% of the world's soybean meal. Now let's break down how their importance and dominance in the world has changed over time. Back in 1995, their demand was 8% of the world's numbers. In 2007, it was 20% of the world's numbers. And in 2012, it was 27% of the world demand. Now some may ask, well, why are we focusing so much on China? The importance here and what we have to realize is that demand is not going to be easily rationed, and we'll talk more about that in just a moment. The other major use of soybeans is soybean oil, and I wanted to give you a chance to see what the projections look like for 2012. Currently, it looks like China is going to use 29% of the world's soybean oil, the U.S. is going to use 19%, and Brazil is going to use 12%. And once again, I want to focus on those three countries. I've brought up the demand that's coming out of China and the U.S., and this demand goes from 1994 through 2012. You can see China actually surpassed the U.S. in the total soybean oil demand back in 2006, and they actually continue to grow as we go forward. We do have some additional demand coming out of Brazil, but it's nothing like we're seeing as a growth rate coming out of China. Just like we did on the soybean meal, we really want to focus on China's soybean oil demand. And so I've brought up and isolated their demand numbers from 1995 through 2012. We're going to do the same thing we did with the soybean meal, just to show you how their growth rates have changed. If we look at the time frame from 1995 through 2007, and then again from 2007 through 2012, we can see that from 95 through 2007, their growth rate on oil, just like on meal, was 13%. If we look at the 2007 through 2012 time frame, we can see that their average annual growth rate isn't as robust, but still comes in at 5%. Their importance in the world is very important, though. Going back to 1995, they would have used 13% of the world's soybean oil, In 2007, they'd use 26%. And as we take a look at 2012, they'd be 29% of the world's soybean oil demand. Now let's talk a little bit about what's going on in China to cause this. We'll get into our story on how hard it is going to be to ration the demand that we're going to need to ration. As China's incomes have went up, what has happened is that they've wanted to change their diet. The first thing that they wanted to increase is they changed their diet away from more of a starch-based diet to a protein diet, as they included more oils, which gave them more calories. And that's why we've seen the strong increase in soybean oil demand out of China. The next thing that happened, though, is their consumption of meat increased greatly, and that's what I want to talk to you about now. The best way for us to get a feel of what's happened on their meat consumption is to take a look at how much they're consuming per capita, and then we'll compare that to the U.S. number. In the United States, we peaked back in 2006 in our amount of meat that we're consuming. Currently, on a per capita basis, we're consuming about 230 pounds. China currently is about 115. So we can see they have a long way to go to catch up with that. But if we look back in time and look back to actually 1976 at the beginning of our chart, we can see that they were only at 25 pounds. So from 1976 through 2012, they've increased from 25 pounds per person to 115 pounds per person. And that's what's really caused the strong demand for the soybean meal they have been taking from not just the U.S. but all other countries. We'll now focus on the total amount of meat consumption. As we can see, China's in the red line, the U.S. is in the blue line, and going back to 1991 is when China overtook the U.S. in the amount of meat that they're consuming. Now, we've talked about the meat, and we've talked about them wanting to change their diet and include more calories. Those are two areas that it's going to be very hard for China to go back and change their diet on. And so that's why we've really spent a lot of time helping understand what's going on with China, so that everyone understands globally what it's going to mean as we need to ration the demand that we talked about rationing earlier. It's going to be a tough chore, and it's going to continue to make the soybean markets very, very volatile as we move through the rest of this year into next year. Now we're going to change gears a little bit. We've had a chance to gain a very firm understanding of what's going on in the world soybean markets. Now it's time for us to really focus on, as a soybean producer, how do I market my beans differently? How do I market my soybeans in this new era? What are the things that I need to do? What steps do I need to take? And that's what we'll talk about next. As we talk about marketing soybeans in the new era, there are really 6 areas that we want to focus on in order to have a successful marketing plan. The first item that we really want to focus on, and I know you hear this many times, there definitely has to be a plan, and it needs to be a written plan. We're going to unpack that one in a minute, but we really definitely have that as the foundation of our marketing pyramid. The other item that doesn't quite get as much attention that we really need to focus on is the profitability. As we see costs go higher for each of the farmers and our break-evens are higher, we really need to focus on our profitability, and we're too going to work on and talk about that one in just a little bit. But as we talk about being able to navigate these ever-changing markets in this new era, it's also very important to make sure we're getting enough information. Information not just from our own backyard, but information from global sources that really allow us to fully understand what's going on not just on the supply side, not just on the demand side, but also on the economies of all those foreign nations that affect our supply and demand. And guys and gals, these are changes that a lot of times and factors we haven't had to look at very much in the past in the soybean markets. The next item is your opinion. I think unlike a lot of other years, it's very important to really make sure that you're developing a very well thought out opinion about what's going to happen in the market, and also sourcing a number of different opinions to make sure that you're comfortable with what's going on and the amount of risk that there is. Once you've developed your opinion, then we really need to focus on the action. What is it that you're going to do? But most importantly, why are you going to go ahead and take the steps that you are going to take or don't take moving forward in your grain marketing? The sixth and final step that we're talking about then becomes, once you've brought your plan all together, it's to make sure that you take the time to execute your plan. And that sometimes is the hardest. Each day we talk to many different farmers, and one of the hardest parts about the whole marketing plan many times is getting the execution and taking time for that. But that's going to be very critical in marketing soybeans in this new era. A moment ago, I highlighted 6 main areas of marketing that we thought it was going to take to go ahead and do a good job in this new era. I want to dig in a little deeper now, though. I want to focus on the plan. And as we take the cover off the plan, we can see what it uncovers is that just like a lot of other people you hear talk about a plan, it includes acres, it includes the yield and tools and crop insurance. But then all of a sudden you see cost of production. A lot of times that hasn't been talked about as much in the past. Then you see strategy. And the strategy is what I really want us to focus on. When I talk about strategy, what we're really focusing on is why do you decide to sell when you do? I know, like a lot of other producers, everybody gets in a groove and it's like, well, the high came in before harvest last year, or the high came in after harvest this year, so that's what I'll do. But I want to show you guys and gals a unique perspective, some unique charts on soybean prices. I'm just going to walk you through and lay this out. I'm going to show you a number of different price charts here, but if you follow along with me, I know we can walk through it together. Across the bottom, we've laid out 20 months. We've went ahead and had it so we start with the January prior to when you ever plant your crop. And we carry those dates on past August of when you would have harvested and went into the next year and actually may have already stored and brought beans out of storage to sell. On the left-hand side, we have the prices. So we have a 20-month price chart. Our whole goal in this is for you to be able to see when would have been the best time to price your soybeans in the crop years of 2006 through 2011. So to get started in this, I'm going to go ahead and now bring in the 2006 crop year for you. What I want you to focus on is the shape of the line and also keeping track of when the high occurs. Is it before harvest or after harvest? So we can bring in the 2006 crop year prices and we can see that the high actually came in after harvest, and we'll talk about when exactly after harvest in a moment. Now as we bring in the 2007 line, we can see that guess what? Just like the prior year, and the highs actually came in after harvest. But then along comes 2008. And we know if we think back 2008, we had a major meltdown of financial markets, but our high came in actually ahead of planning. And actually that year you'd have been better off selling your beans before you'd have ever harvested them. So just contrary to what we just saw the two prior years. Then comes 2009, and it really just chops in a range all year, and really it wouldn't have mattered whether you sold ahead or after harvest. Either one would have netted you about the same price. And then along comes 2010. And 2010 gives us a high after harvest. And then along comes 2011. And it looked like on 2011 the high was probably going to come in prior to harvest. But because of the hot, dry conditions we had, we actually brought the high in after harvest. I'm now going to come in, and if you'll count along with me, we're going to identify exactly when during each of these years the highs occurred. So in 2006, the high came in actually in July of after harvest. 2007, we had the same thing. It came in July after harvest. 2008, we actually came in July, but it was before harvest. In 2009, it came in June prior to harvest. In 2010, we came in February when we had some crop problems coming out of Brazil and Argentina, and that would have been after harvest. And in 2011, it looks like we're in the process of putting in the high, which would have actually brought it in during the July and August time frame. Now, if we go ahead and add up our highs, we can actually see that 2 of those years the highs came in prior to harvest. 4 of the years they came in after harvest. But if you recall and think back with me as we walk through each of those individual years, each year was different in many cases. And I guess the point that I want you to take away from this is that you need to maintain great flexibility in your marketing plan to decide when to sell. Just don't do the same thing every year. That's where the opinion, the market information, and your action comes into play. You really need to focus on making sure you're actively thinking through your marketing decisions and maintaining that flexibility of when to sell. Now, we've walked through those 6 different parts of marketing, and we've really honed in on the planning part and putting together a solid plan. But because of the increased volatility that we have in the markets, because of the higher production costs that we have, it's really important that we focus on the profitability. So as we pull back profitability and look at what makes up those areas we really need to focus on, I really think we need to give extra special attention to always knowing where our profitability is on our farm, on a given acre, at any time during the year, and we need to think about that continually as we go forward. Just like if you think about your yield monitor that you use in your combine. You'd have probably years ago never thought about the fact that you're rolling through the field, you're able to see what the yields are doing in real time on a screen in front of you, Honestly, a lot of you would have probably never even thought of the need for that. But much like this, in knowing the profitability of your farm on every acre all the time, I think we're entering a time when we really need to focus on that. So let's really dig in deeper into this profitability part of marketing. In order to best illustrate this point, what I've brought up for you is a matrix. On the left-hand side, we have harvest price. Across the top, we have different harvest yields. And within the body of the table, what I've done is I've identified different profitability levels for a hypothetical farming operation. Now for this farm, just to give you some information about it, this farm would have an APH of 50 bushels per acre, so that'd be an actual production history used for the crop insurance of 50 bushels per acre. The crop insurance percentage that's being included here is 75%, and we're just going to say for this example that the input costs were $400. So what we're going to do is we're going to value the inventory of this farm at different times. Now what we're taking into account is, in addition to the selling price of the sold and the unsold grain, we're also taking into account the input costs. In addition to that, though, we're also taking into account crop insurance returns. And those are all factors that you need to take into your farming operation and you need to think through. I want to point out a particular example to you. And as you're thinking about your farming operation, what I've identified is 40 bushels per acre and a 1650 yield. For this particular farm, what that means is $248 per acre in profit. Now, until we can have a solid marketing plan, we need to understand the financial impact of every decision, whether you make it or you don't make it. And the best way for us to do that is to put together a matrix like this. Now, what I really mean by that is, in this example, if we wanted to identify if prices went $2 lower, let's say they went from $16.50 down to $14.50, we can see that our profitability would go from $248 an acre down to $168 per acre. And in these very volatile times, you need to know that for your farming operation. You need to know how much risk you have at hand so that you can take the appropriate steps. Because if for some reason that $168 per acre would have actually been a loss, that would have shown you that, and you'd have known that you'd have had to take some appropriate steps. But on the other side of the coin, if the prices would have went from $16.50 on up to $18.50 instead, we can see our profitability would have went from $248 an acre to $328 an acre. And let's say you'd have went ahead and sold out at $16.50, didn't have any bushels left, and now you're saying, well, what if prices go up? What will I get for additional profits? And you can see in this example, you would have, but you need to have some type of table in front of you so that you always know where you're at in regard to your profitability per acre. And that's a big change from where we've been at. The factor that we haven't talked about that really brings this even to be a bigger necessity is the fact that the government's changing their safety net. As of right now, you really don't have any type of safety net underneath you unless we ultimately end up making it for yourselves. So it becomes even more important that you understand your financial situation at any time. Now, as we wrap up things today, I always like to make sure we have some things to take home with us and some of the strategies that can help you manage your soybean revenue and your risk. Really focus on understanding the global market fundamentals, not just what's going on in your backyard, not just what's going on in the United States, but really take the time to understand what's going on globally, not just in the grain markets, but also in the financial markets. In addition, we talked about maintaining flexibility when deciding to sell. So make sure you focus on having that flexibility in your marketing plan. And in addition to that, make sure you understand the financial impact of the marketing decisions you make and you don't make. Thank you very much today for giving us the time to talk to you about grain marketing this new era and understanding. We want to give a special thanks to the Nebraska Soybean Board and also to the University of Nebraska Extension. This has been Jeff Peterson. Thank you very much for attending.